Hello, folks. Good morning. Welcome to a new episode of GSN Invest. The subsector that we are looking at today is one that has been in the news for the last few weeks because that broader sector is facing a lot of headwinds, right? So, the sector that we're talking about is the ER&D space, the IT ER&D space in the country. And what we'll be broadly doing is looking at three companies whose Q1 results have come out, trying to quickly summarize the performance of the businesses in those three companies and try to see what trends are kind of emerging there. And as investors, how could we position ourselves to benefit or avoid some of the trends that are playing out as such, right? So, three companies that we'll be looking at today are Tata Technologies, Tata Elxsi, and LTTS, right? So, all three of them have come out with their Q1 results. Uh, Revenue growth has been on the relative weaker side for Tata Tech and Tata Elxsi, right? So we'll quickly sum up the financials first and then go into some of the final nuances for the businesses as such, right? So Tata Elxsi reported a revenue degrowth of 4% along with a very sharp 20% odd degrowth in the profitability, right? Tata Tech again reported a 2% odd degrowth in their top line. They reported a slight improvement on the PAT figure, but operating margins continue to decline both quarter on quarter and year on year as well. Right? LTTS kind of stood out amongst the pack, reporting 16% plus revenue growth and improvement in operating margins, at least on a sequential basis. And broadly, PAT kind of grew 1% odd or so, right? So, clearly the standout business amongst the three. Now, with the headline numbers out of the way, let us try to dig deeper and understand what has been happening with these individual businesses as such, right? Tata Tech, as you all would know, has amongst the highest exposures to the auto space, right? Around 83% of their revenue still comes from the auto business, and within that business as well, they've got a relatively high concentration to some key clients, right? They've got anchor clients in Tata Motors and JLR. Those businesses, as we know, have had some challenges, especially on the global front. One of their Vietnamese clients, right? They have a Vietnamese client called Finfast, I think. That business has been struggling quite a bit, right? So, out of the top five odd clients that they have, almost all of them are struggling. And given that they are in the mobility space, in the auto space, which broadly is facing a lot of problems, this sector, this business is facing a lot of headwinds, right? So, if you think of it from a revenue mix point of view, if 80% of your business is facing challenges, no matter how well you do in the other parts of the business, it will kind of take a toll, right? And rightfully so. If you look at the revenue has degrown, even on the margin front, right? Or they've got a both a year-on-year and a sequential decline in margins from around say 15.9% in Q1 of last year, 16.7% in Q4 of 25 to 14.6% in this Q1, right? So on both fronts, on a YOY front as well as a QOQ front, you had a margin decline as well as a decline in revenue as such, right? And broadly, because the sector is under challenge, obviously, if your core business is under challenge, your ability to invest in new projects and new developments, etc., goes down as well. As a result of which, deal wins have been relatively tricky, right? They did note they had won some smaller kind of deals towards the end of the quarter, but broadly, deal wins has been a challenge in the space, right? And from the commentary that we hear from LTTS and Elxsi, it becomes clear that this subsector is going to face challenges at least in the next few quarters or so, right? So, technically, not a part of the business that you would be very excited about, right? Then we move on to Elxsi. Elxsi, as folks who've been tracking the ER&D space would remember, is one of the darlings of the market, right? In the last kind of bull run that happened, because the business has such spectacular margins, and it was like amongst the better ER&D players in the market. The market kind of rewarded it quite handsomely, right? That being said, because of the revenue mix and the composition of the business now, that end of the business is struggling as well, right? So margins have been on a downward trajectory, with operating margins now below, close to 18%, 18.2% or so, which is again both a QOQ as well as a YOY decline in operating margins. More importantly, all three of the segments that they operate in, right? Transportation, media and communication, and healthcare and medical equipment, all three of them reported a decline in top line, declining between 5 to 13% or so, right? So, not very kind of attractive prospects, and kind of facing similar problems that your Tata Tech faces, albeit on a slightly lower scale, right? So 55% odd of their top line is still mobility sort of driven, and as that business suffers, obviously you'll take a hit on your growth as such, right? So two businesses which appear to be struggling a bit, and then amongst the two, LTTS kind of shines out, right? So we'll try to understand what seems to be going right with LTTS, uh, and how we can use that to kind of think about a broader investment strategy as such, right? So one benefit that LTTS has that the other don't, is that it's relatively well diversified, right? So they do have a mobility presence, but then they have a sustainability sort of vertical as well, and then they have a tech vertical, right, which is hyperscalers, etc. The sustainability vertical is in your plant engineering, etc. Right, so you've got a relatively diversified kind of sets of businesses, as a result of which, even if the mobility business suffers, right, and it is not that the LTTS business was immune to the shocks. The mobility business of LTTS took a 4% odd hit in this quarter as well. But even within mobility, they are relatively well diversified. Right? It's not a pure auto exposure. They have exposure to aerospace, they have exposure to uh, rail and other commercial vehicle programming as well, right? So, a much more diversified set of businesses makes it quite resilient in the current environment, and that has been one of the reasons why it's been able to kind of grow at a relatively healthy pace, right? Now, you could say that the growth is from the work that we've done in previous quarters, but will that kind of continue, right? And do we have visibility that could potentially continue? And a few things that we have that will kind of give us incremental confidence here. One is the deal wins for LTDS have been extremely strong, right? So they report their large deal wins, and their large deal wins have been 200 million plus for the last three consecutive quarters now, right? So a good, consistent performance, consistent growth in your large deal win number gives you relative confidence that going forward the business will be able to grow well as well, right? And in an environment where other companies, other IT companies, have either been kind of shying off from giving any sort of guidance or giving extremely sort of weak guidance, LTTS is guided to a double-digit revenue growth for the year as such, right? Which is again quite a healthy sign, more so in the current environment, right? Another major thing that appears to be going LTTS's way is from a margin standpoint, they are gradually improving, right? So Q4 was close to bottom margins for the business. For those of you who've been tracking the business would know, they had gone out and acquired a business in the tech part of their vertical. That business was a relatively lower margin business, right? The SG&A costs, etc., for the intelligence business was quite high. So as they kind of integrate the business into the core business, for the first few quarters, you'll obviously take a hit on margins, and then that will kind of gradually improve, right? So they've given a glide path that say by early FY28 or so, you'll have a consistent margin improvement trajectory, and we've been seeing part of that kind of happen starting Q1 itself, and management is guided that that will kind of likely continue over the next few quarters as well, right? Another factor that had kind of impacted LTTS in Q4 is that to sustain its growth, it had effectively taken a cost hit, right? It had taken a margin contraction, a margin hit on themselves to be able to effectively serve some of their key strategic clients as such. That now appears to be reversing slightly, right? So that will be another driver for kind of improvement in margins. And the third kind of driver for incremental margins is the sustainability vertical, which is a substantially higher margin vertical for the business, has been growing quite fast, right? So the sustainability vertical grew at almost 16.4, 16.5% odd for this quarter, which is a very positive sign, right? You want your higher margin parts of the businesses to kind of grow at a materially faster pace, right? So a lot seems to go in favor of that sort of a business. So that was a quick summary of the broad ER&D space. We've covered the three sort of major businesses, given you a highlight not only of their performance but of the risks in the business and why parts of the business could be struggling or facing some sort of a challenge as well, right? I hope this video added value and helped you understand the ER&D space slightly better and put the results in context. We try to simplify this as much as possible. So if this added value, please do subscribe to our channel. We are trying to get to 1,000 subscribers now. And if any of your friends are interested in the space, interested in the sector, please do share this video with your friends as well. Thank you so much. Thank you for your time.